Hello and welcome. My name is Gino Barbaro, one of the co-founders of Jake and Gino, and today's guest on the Movers and Shakers is Jeff Davis. After Hurricane Katrina, he moved from New Orleans to Houston and started making moves, working his way from a data entry clerk to a sales rep for a large Fortune 200 firm. Jeff took his commissions and began investing in real estate so his commissions could earn commissions. He's been scaling to a 952 unit portfolio. Wow, seeing the benefits of growing your net worth and wants to help others do the same. Welcome to the show, Mr. Jeff. How are we doing, brother?
Doing great, Gino. It's good to be back on.
It's interesting. You joined the Jake and Gino community to buy multifamily, and it feels as if you're cheating on me right now because you're in the self-storage space. So let's talk about that a little bit.
Yeah. So I joined, golly, 3 years ago, Gino.
I know. It's been a while.
And I started just kind of networking within my network. And at the time, it just seemed that the easiest way to get into commercial real estate was through the capital. And that's what I did. I became a general partner in a lot of different deals. At this point, I'm up to about almost 4,000 units in apartments as a general partner in raising capital. And one of my larger partners, we've known each other for many, many years, and he's a successful entrepreneur. And he said, "What about self-storage, Jeff? I store my boat, I store all my toys, and they just raise the rent on me. Every 6 months, I get a letter. It's just going up. I'm paying twice as much now, and it's literally metal and dirt." I said, and the old saying, Gino, if your girlfriend is a vegetarian, you're a vegetarian. So if my investor is a self-storage guy, then I became a self-storage guy. And that began my path in researching and becoming very familiar with the business and that asset class.
I actually thought you were going to say, how do you know your girlfriend is a vegetarian? It's because she keeps telling you she's a vegetarian, but I won't go there for now. But it's interesting. We have to diagnose. Before we got on the show, I was just telling you there's so many different ways to make money in real estate. You can buy self-storage, you can wholesale, you can buy single-family homes, you can buy multifamily, which I think is the holy grail, but that's just me. I'm very partial to it. But let's talk about the foundation, the 3-step framework, how you took that from buying apartments and you slid this thing over into what we call self-storage.
Mm-hmm. Well, it's, the buy right, and manage right, and finance right. And none of that changes whether it's a single family, a wholesale, multi-tenant. Regardless of what you're doing, you need to understand what is the operating cost model, what is the typical rent, what is your submarket, what are all of the metrics, what are the KPIs. And so when I knew I had the finance piece, an investor, I knew I had that covered, I began talking to the experts in that field to know what are the KPIs I'm looking for, what is your typical operating margin, what is your typical profit margin, so that as I began getting deal flow, I could quickly build a funnel and eliminate some deals after quickly looking at it, right? My revenues, my expenses, and cap rates. What's a good cap rate? What's a bad one? And it just went the same way that it always went with multifamily, that I learned over the course of literally 2 years. That learning time frame went from 2 years to about 4 months. And then I started writing offers and getting those offers rejected. But it took, we're probably a year of writing offers and and getting them and building relationships with those brokers.
Before I really dive into the three pillars, what were some of the benefits of joining the community? I mean, I think for me, and for what I would say our coach Bill Ham likes to say, is we're trying to teach people not to buy real estate. And that may sound crazy and counterintuitive to a lot of you listening, but what we're trying to do is we're trying to avoid people from buying bad deals. No deal is better than a bad deal. And that's why we have buy right, we have manage right, and finance right with short-term bridge debt. We are never out there telling people to buy this, use this type of debt. So for you, what were some of the advantages of joining the community?
Getting on the phone with Bill Ham and having him eliminate a lot of things that we were looking at, right? Is we you get into this thinking you're going to become a multifamily operator of half of the US from this side of the Mississippi to Savannah, Georgia
Mm-hmm.
overnight. And you start getting on the phone and having him underwrite deals with you and him telling you why that's the fastest way to go bankrupt. So it's
Mm-hmm.
um, that's how you learn. Like, hey, here's a fast way to underwrite this deal in 7 minutes or less. And
So what you're telling me right now is if Bill Ham wasn't there on the phone with you, Jeff Davis would have gotten into some pretty sketchy, non-performing deals.
yeah, oh, absolutely. You know, most of the ones that are out there are tough. You know, tough
Mm-hmm.
situations.
Mm-hmm.
So it's very beneficial to have a lot of people in this network get on the phone and not even Bill, right? It's even more people. Hey, what do you think about this? And if you're trying to get to the next step, I can call
Mm-hmm.
Senate. Hey, there's this opportunity, and I think I know enough about it that it is an opportunity. And how would you
Mm-hmm.
handle it? Um, so I've used Senate Eskridge a lot as a real value, right? Text and phone call. So just other members and coaches.
Love that. And when you talk about the buy right, the manage right, and the finance right, I took some notes down here. It's very similar. You're trying to find a location where you're understanding income versus expenses. You're understanding your submarket. You're understanding the value play on here. You're going in and you're trying to add value to this property. Now, the financing component very similar in as far as looking at multifamily and commercial as self storage. The operations may be a little bit different. But Jeff, let's talk specifically about this deal. How did you find this deal, and what was the value in this deal that you found in the self storage?
Yeah, I think you'll really like this, right? I built this using my CRM outreach that I'd been using for investors. I just had this idea about 2 years ago to use it for commercial brokers, and so I had a drip campaign that every 4 months or so. Don't forget about me. Here's my parameters. Blah blah blah. And I
Mm-hmm.
started doing the same thing for self storage guys. Parameters. And then I would follow up with a phone call and I talked to them. And there's a couple of them I really started building a good relationship with and making offers on. And once you start making offers, it really helps in dialing in your uh, your offers.
Mm-hmm.
There was one that came up. It was about to, and he told me this is you're going to do well with this one. He already knew that I was backed financially. It was small enough and big enough, so he called me before he was going to list it. It was a buy
Oh.
listing, and I happened to be on vacation with my wife. I was able to do that quick kind of 5 point underwriting on the price that he wanted, and I called my partner. I said, "Well, I think we have one," and we still negotiated about $200,000 off. He still listed it, but we were already kind of verbally under contract.
Awesome.
And so seller finance, 6% fixed. Technically, it's 5 years, but I can tell you, I talk with the previous owner about once a week, and I don't foresee him changing that after 5 years.
Hmm.
unless I want to refinance out because interest rates drop. And it was a 7.5 cap.
So, Jeff, how did you get the seller financing on this deal?
I had talked to the broker before, right? Like, and hey, is that an option? And he said it's absolutely an option. So it was already not listed as an option, but the broker had already talked to him before he had taken it that it was going to be on the table,
Hmm.
which is why he had me on his radar.
This is important, everybody. I have to share this because this is one of the reasons why I started the Jake and Gino and focused specifically on multifamily. Jeff right now has a toolbox. He came in from multifamily, but all of a sudden he started learning about the conveyor belt theory. He started learning about the three pillars of real estate: market cycle, debt, and exit strategy. He started learning about creative financing and seller financing. Now, this is you can translate any of these strategies or any of these learning ideas that I've just spoken about into any niche of real estate, and that's exactly what he did. And on top of that, he understood deal flow and off market and direct and being able to build that relationship with a broker. What I see most new investors do incorrectly is they go online, try to underwrite a deal, don't even know what a deal is, don't even know what their parameters are. We talk about, Jeff said, KPIs. They don't know what their KPIs are. So Jeff already has the foundation laid. Did it take a little bit longer than Jeff wanted? It always takes longer than Jeff or Gino wants. That's the reality. And it should take a little bit longer because there's a lot of work and you're planting seeds and it takes a little bit of time to harvest those seeds. And you want to harvest the right seeds. Some of the seeds are going to get caught in the bramble. Some of the seeds are going to get caught in shallow earth. Some of the seeds are going to get caught with weeds. But some of those seeds, when they pop up, man, you're going to get some nice harvest out of those. And those are the ones that you're going to work for. So that's the idea, is creating the foundation. And once you're understanding all the different strategies, the different techniques, now you have the buy right, the manage right, the finance right. Now you're talking to brokers and you're doing property tours and you're showing your credibility. And you've got a deal now. What happens after you've got this deal? The deal is closed. Tell me how the deal is going right now.
Um, Better than I. So my pro forma um, was extremely conservative. I learned from being a partner in a few deals, pro forma. Um, I feel like the past few years people were buying on pro forma. My pro forma was 0% growth with 3% expenses for the next 5 years and
Wow.
85% occupancy in year one. So the only growth I had was an increase in occupancy. I'm at
Mm-hmm.
99% occupancy right now. And uh, I had 8% growth in rent and fees in month one. So I'm already trending up. I had $1,000 higher revenue than the previous owner in January of this year.
How many units was this self storage? I'm sorry, I forgot to ask you that.
87 units, and we will add 22. But again, I projected the additional 22 in year two. I'm I'm probably going to execute that in the next 3 to 4 months.
Wow.
Yeah.
So this small little self storage deal, it could be a life changing deal. And you were telling me before we hit the record button, I was that guy that wanted these super large, huge 1,000 unit deals. How has your mind shifted going from that perspective now down to a perspective where I don't need to have the biggest deals in the market?
Yeah. My mind shifted last year when we started looking for these, right? It was all, I think I got into this only wanting the massive 400,000 unit. The more units, the better. Now, um, my shift is I want a small group of partners, intimate. Um, it's about closing very profitable deals. Maybe we exit, maybe we don't, but we are all making money. We're high fiving. There's no difficult discussions, and we're taking care of our clients. Uh, and because we know them, there's no past dues at all. So I'm giving a fabulous customer experience. Like I have
Hmm.
a 4.8 Google review. So um, that's my focus, right? It is not bigger is better. It is medium size is unbeatable.
Wow. I love that. For anybody listening right now, if you want to hear a phenomenal podcast on what Jeff is talking about, we had I guess, the privilege or the honor of interviewing Bo Burlingham and Paul Spiegelman. They have the Little Giants Small Giants community. And the book Small Giants is exactly what Jeff is referring to and what Jake and I really preach. We don't have to be the Facebook of multifamily. We want to have this small company that has core values, that has culture, that people want to work at, that you can get a 4.8 Google review in property management, which is pretty much unheard of in this industry. So kudos to you on that. So listening to Small Giants and the Small Giants community, it seems as if that's been part of your mantra. And Jeff, I'll add a couple of things to us. We focus very specifically on what you're talking about as well. We like doing a couple hundred units a year. We like focusing on PPU, profit per unit. So for us, we had the syndication model. We loved it. It brought on a few hundred more units. It built a different business for us. It had different kinds of fee structures. When we exited those deals, the profitability, we were able to take the money out of that and put into our own deals. So there's no one size fits all, but you have to get into it. You have to start and understand I I made a mistake. My decision making, my thinking was faulty, and it's not like you made the mistake. You just didn't know. And I was the same way with you. I thought that I wanted these 500 unit portfolios, whereas Jake and I next month we're closing on a 33 unit portfolio. Makes a ton of sense. It's a 33 unit deal. If you get $250 to $300 profit per unit, you're talking $10,000 a month in cash flow on a 2008 asset. What is wrong with that? There's absolutely nothing wrong with that. Would you concur? Would you agree with that?
Absolutely, right? And
Mm-hmm.
I think the argument becomes scalability. And I mean, I think we could talk for another 30 or 45 minutes. I mean, I have a business model in mind about scalability across asset classes that I might be doing a trial on in my own, and maybe
Uh-huh.
it'll be a trial and error. I don't know. It's going to have to do about geography and radius around my geography.
Mm-hmm.
We'll see. But the argument is always on the other side about scalability, and that's why you go bigger. And
Yes.
I think we're seeing right now about uh, it's being put to the test with
Yes.
occupancies across the country.
Yes. It's interesting. You don't want to outgrow your infrastructure. I've got two really important questions that I want to ask before we wrap up. The first one is the broker relationship. You need to share with me and the listeners how you were able to struggle for a couple of years, not get a lot of traction, and then all of a sudden you done a deal and our brokers want to talk to you and you're on everyone's list. How did that happen?
So that is first off, don't stop. I do like my little drip campaign that I have had. I'm not pestering them. And I think I'll start with go to LoopNet and Crexy, download some deals, and underwrite them, and call those. That's where you're going to get your broker list.
Yes.
It doesn't mean that those are the creme de la creme. They're probably garbage, but you at least know who the brokers are in your market. And that's how I learned them. I mean, of course, there's networking events, and that's how you can meet them. But by calling these people up from the LoopNet and Crexy, if you can find 5 or 10 that are consistently posting and that are getting the deals listed, those are your guys. So I put them into an active campaign. And I can show you a trick that I did that all I have to do is add their names into a Google sheet, and it automatically populates them. Just
Oh,
reach out to me. I'd be happy to show you how I did it. Um, but following up, right, and that drip campaign helps that. It asks them to schedule a meeting with me or just reach out, and then they start sending you the deals. I will tell you, once I closed this, I made a big announcement like, hey, I finally closed on this. They love that. Those brokers want to know that you are
Mm-hmm.
doing things, and they
Mm-hmm.
know the difference between a co-GP and a lead. And so when I did tell them, like, hey, I just closed on this and I'm a lead, it's my first one, then they know that you've got the finance piece, which is the most important to them. Frankly, brokers don't care if you're managing it right. They want to know that you can close and
Yes.
you can he bring the cash to close?
Yes.
Because if he can bring the cash to close, I'm getting my commission. And
Mm-hmm.
so that's what the brokers, we're all self incentivized, right? And that's what they care about.
And also, Jeff, let's not underestimate the power of wanting to be able to work with somebody who you like and who does what they say they're going to do. That's the important thing. When the broker reaches out to you, underwrite the deal. Don't take a week, and don't tell the broker that I've got a W-2 and I'll get back to it. No, they send you a deal. They gave you the responsibility. Now is yours to underwrite that deal as quickly as possible and get it over to them. You put out a number, you stick the number. I mean, it's just certain things that you need to do because you want to get continual deal flow from them and really get that relationship. And I think the last thing I would say is announce it. Every time we close a deal, let everybody know. The brokers are out there scouring who's doing deals. If it's a 4 unit, if it's a 40 unit, if it's a 400 unit, it doesn't matter the size. It's still a deal closed. Now, Jeff, last question. If I'm looking to start in real estate, give me some tips or some ideas or some things that I need to be doing today because I know the opportunities in the next 12 to 24 months that are going to be presented by interest rates dropping, by us going into a slower economy are going to be there. But I need to take action today. What do I need to be doing today to get into real estate?
Are you in a community or are you not?
Mm-hmm.
Yeah. So that I'm asking, are you talking about a person in a community?
I'm talking about someone who's been watching a few podcasts, they've read a couple books, then all of a sudden they have a chance of possibly getting laid off, but they haven't even started yet. Like they're like, I haven't even started yet.
So I had this conversation with somebody that had heard me on a podcast, and she was asking about a specific asset class and then about apartments and then this and that. I said, first figure out, like, I do apartments.
Mm-hmm.
You're talking about industrial. I would bet there's a community just for that.
Mm-hmm.
So figure out, if you think industrial is awesome, go find that. If you think self storage is awesome, go find that group. If apartments is awesome, join Jake and Gino, because then you don't have to worry about anything but learning how these people are locking down apartment buildings or industrial warehouses or self storage. And you can surround yourself by those experts and probably some partners with cash and some key principles for bank financing. And they can tell you who the real estate agents are. And then maybe even they can be in your neighborhood.
Mm-hmm.
So I would find out and soul search what asset class you want to play in, and then go find those communities that are specializing in that.
I love that. Where can the listeners get a hold of you, Jeff?
Jeff.Davis at bridgestoneinvest.com.
Cell number? You brave enough?
281, yeah, 281-904-2275. I'm happy to help, or point in the right direction.
Awesome. Before we sign off, I want to hear Jeff Davis's life 5 years from now. What are you trying to accomplish? What are your goals for the future?
Yeah, so since I joined you guys, my goal was to be involved in a deal every year, right? Conveyor belt. I've been diligent about that. Now my goal is acquire and be a lead on a deal, a million or to $5 million deal every year. As these start to roll off, I will do that. That's
Mm-hmm.
my goal. So, we're on the hunt again. So hopefully close on one by Q1 or Q2 and continue to manage this one. So in 5 years, that portfolio of my own of Bridgestone should be in the $5 to $10 million range.
That's awesome. Jeff Davis, young entrepreneur who joins Jake and Gino. He's all tearing it up. I am going into multifamily. I want these 1,000-unit deals plus. And then the reality is he gets on the phone with Bill Ham, and Bill Ham starts shooting down these deals. And Jeff's like, what am I doing wrong? And Bill's like, Jeff, young lad, you're not doing anything wrong. It's a function of the market. And these people who are paying these prices, they're going to get hurt. I'm here to protect you. I'm here to teach you not to buy real estate and or to teach you to buy real estate the right way. And Jeff is still plugging away. After 18 months, he's still looking. He's working on his CRM. He's doing his drip campaigns. He's talking to the brokers. And then one fateful day when he's on vacation with his wife, he takes that phone call, and I'm sure his wife is like, honey, we're on vacation. And Jeff's like, honey, I know you're a vegetarian. It's okay. But still, I've got a deal. This is like fate. I finally got one. And guess what? He gets one. The broker sends him the deal over, really conservative estimates, which is what I like. And then all of a sudden puts the deal in the contract from all the things that he's learned, whether it's the conveyor belt, whether it's seller financing, whether it's conversing and talking and building relationships with brokers. These are all skills that you need to learn. And then one day, a deal just falls into your lap, as it did Jeff Davis. But really, the deal didn't fall into his lap. He worked his ass off to get the deal. And that's what I want for all of you listening. It's hard work, but that hard work will ultimately pay off, and it will transform your life. Jeff Davis, thank you for being on the Movers and Shakers. I was going to say Jake and Gino show, but thank you for being on the Movers and Shakers show. This is a privilege and a pleasure to have you on. And for all of you out there, if you're serious about getting into multifamily, go to jakeandgino.com/apply. At the very least, email me, gino@jakeandgino.com, and I'll send you over a copy of our Wheelbarrow Profits book. Start the journey. And as always, we hope you enjoyed the show, and I'll see you on next week's Movers and Shakers. Thanks, Jeff.
Thank you.